Morning traders, welcome to Markets Morning. It is the 19th of October 2018. And if that number, 19th of October, rings a bell, it's the day of the big crash back in 1987. Not that I'm saying that there's going to be a big crash tonight, but it is Friday and there is some ominous feelings about markets. I'm not over-egging that by any stretch of the imagination, but the setup in markets does trouble me at the moment. I'm not going to get too bearish unless or until last week's lows gave way. Indeed, as I've been saying the last few days, we've dropped a rock into the pond. We've got these ripples. As Mandelbrot tells us, volatility clusters. So you get the ups and the downs, which is what we've seen. Again, that's what we had last night. We had the S&P down 1.43% at 2768. We had, can I just say, I know that there are people out there who buy a stock when it closes above the 200-day moving average and sell a stock when it closes below the 200-day moving average. You'll notice when I talk, I hardly ever mention the 200-day moving average. For me, it's not that big a deal. There's a lot of focus on it for the S&P 500 at the moment. It matters less to me whether it closes above or below and all that kind of thing. What matters to me is the way that the price action, the structure of the price action is working out. So anyway, I just want to say that. Nasdaq down 2.23% at 71.16, looking quite wobbly. I'm looking forward to doing my end of week research tomorrow, those 30-odd markets that I look at, and just seeing where the setups are, where things finish tonight. China was obviously down yesterday. I'm going to lead off with the Shanghai and the China A50, and then I'm going to talk about the Aussie dollar. We're going to talk about currencies. US dollar was stronger last night. Brexit, EU's trying to do a deal. Mrs. May can't really come to the table with a deal that she can then deliver at home. That's causing ructions. It's not just about Ireland. Ireland is obviously part of it, but it's the inability, because she had that election, of her to actually say to Europe, well, we've actually got a deal, because she may not be able to do that. Anyway, sterling's down at 130.18. Euro under pressure as well. It's down at 114.50. Remember I said I was thinking about a round trip? We're almost there. 114.30, really important. If that breaks, you've got 113, 112.80. Aussie's under pressure, but, you know, doing okay, kind of. Euro Aussie's down as a result because the Aussie's outperforming. 70.95. Kiwis down. CAD's lower, so dollar CAD's up. Gold's holding in because there's risk aversion. The yen's got a bid because there's risk aversion. And oil fell out of bed again. Let's dive straight in and we can talk about things as I go through. Have a look at Markets Morning, the written piece today. You know, these things are complementary. This video here and what I say in Markets Morning work together. And the reason they work together is it's time critical that I get my report out every morning. But the reason I write that report every morning is to distill what I'm thinking so I can do this video in one take. One take, no breath some days, as you see, but one take, but they work together. That's why I refer back to it all the time. Anyway, let's have a look. China A50 weekly. This is the chart from my weekly scan last week, and you can see this week's data. 10.6 is the key level to watch. 10.7, 20 odd is where it closed last night. If it breaks 10.6 on a closed basis, 9.3 becomes the Fibo extension. Volatility clusters, crashes happen from already falling markets. And what you've got here, if you think about the McKenna, my very first setup, which was a kind of an Elliott wave idea, but a Fibo thing. Support, 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 support. Come down, we've got to move 100%. Come back up, 38.2%. Can't get through, can't get through, can't get through. That's also support, 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 support. Now, if 10.6 breaks, I've got to run to 9.3, so keep an eye on that one. Similarly, in the Shanghai comp, this is a monthly chart. We are getting close to a full round trip of that move. A break of that long-term trend line. It's a couple of goes here, one actual touch there, but a couple of goes here. So we're very close, very, very, very close. If we get a break of that line, a close below on a weekly basis, certainly a close below on a monthly basis. And that's the thing, the China A, having had a good month last month and looked like it was going to break higher, it's back on support just like this. So we've got to watch these. And the reason we've got to watch these is because what they imply for other assets, like let's say the Aussie dollar. This is from Andreas Larsen at Nordea Markets. He tweeted this to me last night. You can see that, in the same way that copper is a proxy, a financialized proxy for worries about global trade, worries about the Chinese economy, that kind of thing. So too is the Aussie, and the Aussie's outperforming at the moment. Now, today's a big day in China, a huge day. We get the triple treat. We get retail sales, investment, and industrial production, and we get Q3, I should say. We're in Q4. Q3 GDP. So massive day for Chinese markets when we're right down here near these really important levels. Massive day for the dollar yuan, which is at 6.94, and for me, break territory, break and run towards 6.98. Now, China's a managed economy. Is it going to let the data deviate from expectations too far? No, unless it's got an agenda to run dollar yuan up through 7. We'll see. Market will react either way. Anyway, so the Aussie will too if Shanghai keeps falling, if dollar yuan keeps rising. Let's dive into the normal stuff now. 5.5 minutes or almost 6 minutes in. So you know what I said last few days? We had a triple failure in this 116, 20, 30 region. We had a 115, 20, 116, 20 range. That broke. I said yesterday I thought a full round trip. We're not quite there. We are at 53 now. So we're within 20 points. That 114.30 region has to hold. It has to hold well. If it breaks, it will be under intense pressure. If you have a look, if I drew a line from there, this is a monthly chart, which is messy, of course, because I've turned a daily into a monthly or a 4-hour into monthly. If you draw up through there, 114.30 is actually the level off that low. So as you can say, 114.30. If it breaks, I'm targeting 112.80 to 113.20 as my next level. Dollar yen, a little bit messy because stocks have been up and down. You would expect that. That's 4 hours. You can see there, not exactly bearish engulfing, although it might be. But key here is if stocks are going down, and I'll come back to stocks. If stocks are going down, then so too will dollar yen. This is a 4-hour chart. Obviously, it's going to look messy when I turn it back into a daily, but you can see it's broken that little uptrend. Trend lines. Have a look at the Nikkei chart. I shared on Twitter the other day a Nikkei chart, which was just the 4 hours. And it had a steep uptrend that broke. You know what I think about steep uptrends. And then it's broken the second uptrend before the big collapse last night. So, you know, as I say, if I could only do one thing on a chart, if you said you can't do anything, one thing, what would you choose? I would choose trend lines every single day of the week and on every single market. If you have a look at sterling, it's coming back towards this trend line. 129.90 is what I've written. That's the level for me. A break of 129.90 gets me 129.20. But theoretically, I would argue that if we break down towards 129.90 and that goes, then I'm going to be talking about 126.60. You know, it's all about Brexit in many ways. US dollar stronger. It's still in a range though. It's 96 roughly, 95, 98. It's, you know, up near the top of the range in the same way that euro is getting close to the bottom of the range. So there's some catch up for sterling potentially. In terms of the battler, that's the 4 hours. It's rolled over. Similar story to euro. It's got support at 70.85. That data yesterday we had, that employment data was not really believable. It was a sample rotation. There was a part rate falling. Now, 5% unemployment. At the end of the day, as you'll see what I tweeted yesterday about it and what I've written in Markets Morning today, at the end of the day, if we persist at 5% unemployment for a time, that will have an impact on wages, and that in turn will have an impact on the RBA. But it's too early just yet, and other drivers like the US dollar, like China, those kind of things are key. But 70.85 for me to watch. If 70.85 breaks, you probably get a run down towards 70.40 for the battler. Dollar CAD. Dollar CAD has broken higher. If we draw that, let's do it this way. Let's do that. This one. Right, so that's the one I've been watching on my weeklies. So if we go weekly, you can see. So that's the downtrend. Now, doesn't that look like it's going to break higher? If that breaks, dollar CAD's been a good leader. If you've been getting, and I know I haven't been trading dollar CAD because I've got this struggle. I've got this struggle with my rhetorical self and my trading self in terms of what to do with dollar CAD. The key thing here is that if that breaks, and you know we've had 1 or 2 or 3, and not 4 there, but you know if that level breaks, and let's just get a handle on it. 131.22. So call it 131.30. If 131.30 holds and closes above, then that's going to be a signal the US dollar's, I think, going to kick off. Keep an eye on that one. In terms of the Kiwi, there's my dog barking. Hope it's not making too much noise. Right, same story. This is very similar to that Nikkei chart. Got too steep, broke, had another one, broke. Where is it going now? Well, it's off its lows. But this is the level I talked about yesterday, 65.30 odd. It's at 65.30 now. To me, that suggests a run back towards 64.90. Now, not big pips, but decent percentage. So keep an eye on that one. If we have a look at gold, gold's in a like 4 or 5 day range. You can see it here. It never actually got quite back to that 12.17. It did the other day, but it bounced off there. It hasn't quite got back there yet. If the US dollar strengthens in the absence of stock market falls, I would expect gold to pull back. But if the US dollar strengthens while stock markets are falling, then I would expect gold to retain a bid. We're going to call it 12.17, 12.34 until one side of that breaks, and then we'll see. That's a decent range. $17 is it's big tick country gold. If you have a look at it on a weekly basis, though, look at that. It is, it's starting to get a little bit overdone on stochastics, but it's starting to get some pressure, and that 12.34 is going to be really important resistance. Now, I think we've had a change in terms of copper. What's the date? 19th, yeah. So we've had a move from, what's that, 273, and I'm saying 2, yeah. Yeah, so we've had a move from HGC1 to HGC, I'm just looking at my Reuters here, to HGC3, right? So that's helped kick that down. HGC1 is actually at, oh no, it's come down. No, it's rolled. Okay, it's rolled. Sorry, it's rolled. So we've got it down at 273. So what do we got? We've got 271 as the level. You break down through 271, it starts to roll over. Chinese data today is going to be really important for this. I cannot stress those 4 numbers today: GDP, industrial production, investment, retail sales. All 4 are huge for markets. If China bounces today, that's going to give people a lot more confidence. It might even give oil confidence. If you have a look at oil, it's broken down. Looks like it's going lower. Have a look at the chart on the dailies. I'm getting an increasing sense that we're going back to 64.5 roughly on WTI. 78.5 is the level it's got to hold on Brent. What's going on in oil? Well, this Khashoggi thing is not put to bed in the manner that it was potentially going to be. Excuse me one sec. Because Congress has got involved, because the Turks or somebody keeps leaking things, and aid to the Crown Prince was seen to be going in to the embassy apparently. So if Congress tries to put sanctions on, then we might see a bid come back into oil. For the moment, though, with OPEC, the guys at Forex Live tweeted today that they've seen a report. I didn't see it anywhere else except Forex Live, that OPEC's genuinely worried about supply next year. And we know that because the Saudis and others said that a month or so ago. What's going on now is they're trying to work with President Trump and the administration to take the heat out of this Saudi issue. The result of that is lower levels. 78.50 for me is the key for copper. Now let's look at stocks. We've had a look at Shanghai. We've had a look at the relationship with China A. We've had a look at the relationship with the Aussie dollar. Now what do we see here? Lots of messiness here, but we've seen a re-acceleration on the MACD. We haven't taken out last week's lows. So we don't want to get uber bearish. We don't even really want to be bearish in a sort of a macro time frame unless that level goes. Now, what do I think? I've written this week, and I'll probably say it again tomorrow when I look at my weeklies, that my sense is that we're going to go lower, and that ultimately a sort of a 26.5 kind of level at least is in train for the S&P. At the moment, it failed, had that long-legged thing. Oh, by the way, someone pinged me yesterday and said and asked me why don't I call them their proper Japanese candlestick names. The reason is that what the candlesticks try to do is they try to convey a psychology behind what caused the market move. That's why I use candlesticks. I'm a behavioral economics and finance guy, right? Japanese candlesticks portray exactly the psychological underpinnings of the market behind them. So I'm not calling them long-legged doji or dragonfly doji or this or that or dark cloud cover or any of that kind of stuff, because not everybody quite understands what that means. What I am doing in saying this long-legged candlestick uncertaintiness, I'm not comfortable with that, is reflecting what is actually going on, so that you don't have to go to a reference book and say, well, what does dark cloud cover mean, or what does a long-legged doji mean, or what is a hanging man, or what is a dragonfly, or any of those kind of things. That's what I'm trying to do. I'm trying to convey what's in the market, because so you don't have to go anywhere else. Anyway, so we're not even below 2 days ago, right? So the signal would be, if you got back down to that level there, which is 27.45 futures terms, another sort of 28 points, and you broke through there, then things get ugly. At the moment, just, you know, we've dropped the rock in the pond. We're rippling through. 15.5 minutes. I'm going to get the skates on. Aussie can't get through. Second day in a row, couldn't get through the 38.2% retracement level. So we've got this. This was an omen. Basically, I would say now, if we take out last night's low, and last night's low was 58.46, we are a shot duck for the day at least. Obviously, it's going to depend a lot on what happens offshore, but for the moment, we have a bearish market. Whilst it can't close above 59, sort of 2025, my outlook is for a retest a little bit lower. I think someone's at the door, but anyway, I've got to keep going. DAX. All right, so similar story for the DAX, similar to the Aussie. Haven't been able to get up and through the 38.2%. That, to me, is suggestive that the overall pulse, the pulse lower, hasn't finished yet. Whether or not it takes out the lows is important, but that's the key for me. So keep an eye on that. I'll just quickly show you the Nasdaq as well. Similar story. Nasdaq and Dow look very similar to the S&P, and of course Bitcoin's starting to roll over again, folks. These are decent moves in Bitcoin percentage wise. To me, my sense is that we're going to head a little bit lower, back down to 6,300. These are, we'll see what happens. Anyway, that Chinese data today is really going to set the scene for the end of the week. Watch it closely. Watch my tweets when it comes out. I'll tweet about it, what it means, and all that kind of stuff. As it is. Bye for now. Few Fed speeches, one from Mark Carney as well. I'll catch you on Monday, and I'll have my big chart scan ready to go to talk about then. See you then.